All right. Hello, everyone, and welcome. This is the 19th Know Your MIP call. I'm really excited here to be joined by some awesome people who authored MIP95 with Cogent Bank. We're going to be hearing a little bit about their proposal, kind of what brought them to Maker. You might have heard kind of the preview on the GNR last week. So really excited to get in the nitty gritty. Hope you guys brought some questions. Don't think there's too much else. Just real briefly, this is obviously a recorded session, so let's try not to talk over each other, but would really like to get your participation. So if you have a question, feel free to either use the raised hand feature in Zoom. I'll call on you to ask your question, or you can drop it in chat and I'll read it out for you. All right, that is enough housekeeping. Without further ado, I will turn the mic over and yeah, let's hear about MIP95, folks.
Thanks, Peyton. Can I share my screen?
Yeah, absolutely. Let me give you a presentation here.
And thanks everybody for showing up. We really appreciate it.
Yeah, always makes these calls a lot more enjoyable when we have so many people to talk and answer questions. So thank you. You should be all set on the permissions there, Max, and looking forward to seeing what you got.
Great. All right. And everybody can see that.
Looks good.
Okay. Yeah. All right. So you all know this. We're here to talk about MIP95, which is a proposal from Cogent Bank asking for a debt ceiling of $100 million that they can use to participate loans to MakerDAO. And this is a copy and paste, a replication of the deal that Maker has done with Huntingdon Valley Bank. I'm on with Cogent's president, Chirag Babzar, and Cogent's chief credit officer, Kyle Feldman. They'll answer questions after I go through these slides. I'm the consultant or arranger, and I was also the co-author of the Huntingdon Valley Bank MIP, which created and structured what I think is a phenomenal model for Maker to scale real world assets by being strategically valuable to commercial banks and community banks in particular. So as I've said now twice, this is seeking to replicate Maker's deal with Huntingdon Valley Bank. And just like that deal, the counterparty and I will pay Maker's transaction legal expenses, which should be significantly less because we are simply going to copy and paste the existing participation agreement, and we seek to use the existing RWA Master Participation Trust, this Delaware statutory trust, which was set up for the benefit of MakerDAO for this purpose. So just like I said, we intend to use this master participation trust. I've got a copy of the trust agreement on my screen. We can go through it in detail, same with the participation agreement at any time as questions arise. The request is for a debt ceiling of $100 million, which is the exact same as Huntingdon Valley Bank. And Kyle may talk about the fact that Cogent, being a $1.5 billion in assets bank, has a portfolio that actually fits the criteria, and they can participate 50 or 100 million in short order to really make use of this and scale it. And our goal over a 2-year period is to be somewhere in the $250 million to $1 billion range. And any dollars that are uninvested, because the trust gets pre-funded, any uninvested dollars actually are put to work in a money market, so they can earn yield from Maker. And currently the Huntingdon Valley Bank dollars are in this particular money market. And that's phenomenal for Maker because it's great yield until there's this the participations and this money doesn't go to waste. the minimum yield that the trust must receive after fees for floating rate loans is 75 basis points over the 30-day average SOFR. And for fixed rate loans, 30 basis points over the like-term treasury. When I say like-term treasury, if it's a 5-year loan, then you look at the 5-year treasury. To be eligible to be participated, a loan must be in the pass category, which is according to this rating, internal risk rating framework, the WARE framework, which Kyle oversees as the chief credit officer and can probably get into detail about it, but it's formulaic, it's algorithmic, and so it's reliable and consistent. The participations are going to be 50% of the loan. So Cogent is going to hold back the other 50%. And that way there's a shared skin in the game. And every loan has to be originated by Cogent. I believe this is a powerful strategy for Maker because Maker can then be strategically valuable to community banks by increasing their lending capacity. Why this is special and valuable and powerful and useful is the meta. The meta, as Rune discusses, the story around it. This is Maker impacting the real economy through these banks who lend to small businesses and in their local communities. Maybe Sharad can say how many branches Cogent has, but I think there's 7 or 9 branches that are valuable and impactful in the communities where they exist. I also think this is valuable because it actually demonstrates a utility of DeFi in the real world. So Cogent is a Florida state chartered commercial bank, and it's supervised by the Florida Office of Financial Regulation and the FDIC. And I just want to point out, I have a chart here of the target yields, and we can kind of model it out. Obviously, the yields are changing. I haven't updated this. And if you take a look at Maker Burn, and I've written this in the comments, at this point in this bear market, the vast majority of revenues for MakerDAO are projected to come from real world assets. So this is really important as a strategy. And we think that we can really be helpful to MakerDAO. We can talk about reporting. This is how Huntingdon Valley Bank gets reported. And I'm also simultaneously working on improving reporting across RWA by, right now, I've just transcribed all of the RWA data across all of the arrangers. And you'll see more about that in the future. But it's just to say, it's not just about participation, but it's about providing strong reporting and transparency. So with that, I will stop sharing my screen and I'll hand it over to the team at Cogent, and first to Sharad.
Thank you, Max. Thank you, everybody. There's not a lot to add other than, we look for, I'll take a step back. Our bank was effectively started 4.5 years ago with the sole purpose of trying to create value. There are, granted, thousands of banks out there. We saw an opportunity to be unique and really build out a value proposition for not only our clients, but to our employees and to our shareholders. And that is what we have tried to do. And we've tried to do that by taking the time to understand the needs of the communities that we serve and including what you guys are doing. And, our team of people that builds out Cogent are people that have been in banking for the better part for decades. These are people who have done things the right way, who want to continue to do things the right way. If I'm sitting in your shoes and I'm looking at what are our goals, and again, I'm not in your world day to day. I rely on Max and others to help me to better understand. And what he tells me is, and what you tried to articulate with the Huntingdon Valley deal was get exposure to real world assets as it related to commercial banking. Where I think we differentiate Huntingdon Valley is, first off, you can look any bank up, right? You can look them up on FDIC.gov. You can get all their quarterly financial information that you want. balance sheet, income statements, ratios, anything you want to see. Financials of a bank are all public. The way why this is important to me, because it's one more thing, right? That is different and unique. It allows the bank, one, to Max points out, it does allow us to recycle capital, which is part of our strategy. We run differing types of businesses within our bank that are very, very similar. We're in the residential mortgage space. Same thing. We originate loans, we package them up, we sell them off. We're in the SBA space where we bank and originate loans to help small businesses. Again, same thing. They're sold off in a secondary market. USDA, we do the same thing. So there's a lot of things that we do where this strategy of what we're trying to achieve and what you're trying to achieve fits. From your perspective, when looking at options, number one is who do you want to partner with and why do you want to partner with them? And the one thing I would tell you about us is we believe we're a good partner, and for a variety of reasons. We are good people with a sound strategy that is long-term minded. Most community banks have a very short-term vision. A lot of them are started with the sole purpose of selling it for one or two or three of their largest investors, and that's it. That is not who we are. We built this bank to serve a broader and a larger community for the long haul. And that is our intent. The shareholders that we have, the employees that we're able to recruit and bring on share that same vision. We wouldn't be able to accomplish the things that we've accomplished in 4.5 years if it wasn't for that long-term strategy and an execution plan. So I, for one, am excited about what this could bring. We've actually had conversations with our regulators, including the FDIC, at a high level and helping them understand what we're doing, why we're doing it. From their perspective, this is no different than us, participating our loans with any other entity that we do business with. So we've not come across any regulatory hurdles as of yet. I'll stop there, Max, and certainly take questions.
Maybe you can touch on why you're different. Many other banks, when you talk about blockchain, the conversation dies. But you are different, and you're open and actually excited and ambitious about this technology in the space.
Well, we are. You can look up the press release. We use a blockchain called built by a company called Tacit, and in their press releases out there. We actually did. Us and Western Alliance, we move money back and forth in a test environment via blockchain, right? It was the first movement of money via blockchain. So, look, this is an opinion, certainly not, I believe blockchain is the future. I believe most everything that we do in the financial services world will one day be done on the blockchain. Whether that's in 1 year, 5 years, 10 years, or in my lifetime, I don't know. But what I do know is it does represent a future. And for us, to your point, Max, we want to be part of that future. We want to be part of that future in a really regulatory compliant manner. And, that is the reason why we've invested in Tacit. We continue to work with companies that want to be in that space. We aren't Silvergate Bank. We aren't Signature Bank. But we are an enthusiast of the space, and we want to continue to play a bigger role in that space as opportunities arise. And we look at this as another opportunity to immerse ourselves into that culture.
Awesome. That was a really good answer in response. We have had some questions come through his chat, so if it's okay, I might take a moment to pull some of those in. Looks like Jake said he has a mic. Jake, do you want to hop on the mic?
So I'll take... Oh, sorry, Jake.
Oh, no, it's okay. I just want to say, hi, everyone. My name is Jake. Just have a quick question here for everyone. So for Cogent Bank, how does Cogent Bank plan to align their interests with Maker in the long term? It's short term's interesting, right? But how do you guys see kind of, you and Maker's, relationship maturing over the next, 5-10 years, right? What can we be looking forward to if this goes through?
Yeah, great question, Jake. And what I would say is, our company is built on partnerships, long-term partnerships. at this point, my understanding is this is a need that you all have, and this is an opportunity to fill that need. As we move forward, obviously we're going to be open as we become partners to what else can be done. I'm not so sure, that I fully understand the long term of what you all want to accomplish on Maker. But what I would tell you is, from a banking perspective, we'd love to be a partner with you and where we could create value. I'd never want to do business with anybody where we couldn't create value. If we can't create value for you and Maker, then there's no reason for us to be partners. And it's the, that is the virtue that we built our company on, is nobody should give us business because of who we are. We have to go out there and earn business, and you earn business by creating value. Look, banking is a widget, right? There are thousands of them out there. So you have to find a way to create that value. And what I've always told our teams of people is we create value in a combination of technology that we offer, the value that we create by what we charge them, and by the service that we're able to offer. So for example, even in the PPP space, I tell small businesses all the time, you should be banking with a small bank, whether it's us, I don't care if it's us. But if you're a small business, you are nothing but a number to a big bank. When something gets right down to it, you will have a very difficult time finding people that can make decisions on your behalf, which is why community banks exist. They exist to create value for their constituents, which in many cases are small businesses. And so this is no different. You're not a small business. I acknowledge that. But to me, a partnership is built one step at a time, and it's built on the needs and the value that can be created for both sides. And, from my perspective, this only makes sense if you're looking for real world assets to back DAI, right? And if you're looking for a community bank to partner with, I would tell you that I think we are a really good partner. You can do any and all homework, ask any and all questions. You can look at any of our regulatory filings, any of that, and you would find us to be good people and good partners.
Awesome. Appreciate that answer there. Looks like Frank does not have a mic, so I'm happy to read out his question here. He asked, with the current proposed RWA strategic shift to primarily stablecoin yield via short-term bonds and money market funds, as well as the focus on highly liquid assets, can the Cogent proposal shift from the HVB strategy and adapt, or in order to provide this shift, or is it like in order to provide that strategic shift that the MakerDAO proposal is looking for?
I want to weigh in on this, and then I'll hand it to Chirag. So I'm looking at the latest MIP105, which needs to be built out, obviously, which is this real world asset collateral scope framework. And if you do, Control F, there's no mention of banks. So it seems like the future vision of Maker does not include this participation model, does not include working with community banks. It is really seeking exclusively to work with hedge funds and hedge funds that provide subordinate capital, and Maker provides them a line of credit. My goal is to make the pitch for why this bank model is really a strong model. I'm going to comment on this MIP 105. I'm talking to the delegates. We think this is really good, but within Frank's question is also a question of liquidity. So I'll pass that to Chirag, because bank loans are less liquid than publicly traded securities.
So no problem. Every asset, whether it's a bank loan or a treasury or a money market fund, whatever it may be, all assets have a risk and a reward component to it. And that risk and reward is a combination of all the things that you've mentioned. It is, what am I going to make? What's my risk? How liquid is it, or how liquid it isn't? I think you all have to decide, what is it, right? If you want to be in fully liquid assets, you certainly can be in fully liquid assets, right? Then you are at the mercy of valuing assets on a daily basis. And if that's what you want, then this probably doesn't work. I would tell you, and I tell people all the time, and I think I see that, you're in the money market fund, for example. Money market fund is nothing more than a fund backed by short-term assets. There are no guarantees, right? Twice in the last 15 years, it's broken a buck. So there's nothing that says your principal is protected. And what are you getting in return? I don't really know, but it's going to be low 4%. The other option is you can go buy treasuries. Great. A year ago, treasuries were earning 2%, right? And so, what I think you all have to figure out, broadly speaking, what are you trying to attain at the macro level? To Max's point, where we think this fits in, sure, it's not as liquid as others, but all financial assets have liquidity. Loans themselves have liquidity. It may not be overnight, but there is liquidity out there. It's a financial asset, and all financial assets can be bought and sold every day.
And I think my pitch is liquidity is really important. If liquidity is really important for MakerDAO and a significant amount of the RWA is liquid, then isn't there space in the portfolio for less liquid? Are we really going to dump everything in a single day on the market? I just think that diversification is, of course, a fundamental strategy in all of investing, and this should be a key component of the portfolio.
Well, let me take that one step further, right? Institutional investors and institutional investing, different than retail investing, keep 70, 80, a majority of their assets in, frankly, non-liquid private investments. They're not trying to make their money on the stock market or the bond market. Okay. So I'm not saying that's what you need to do, but there are, again, as I said before, there are risks and rewards, and there are attributes that are pros and cons, and you have to mix them all together, to Max's point, and figure out what is the ultimate strategy. And again, I guess the way I'd look at it is, MakerDAO approved this proposal with Huntingdon Valley. And I know there was a question last week after our meeting that, Huntingdon Valley, I don't believe has put a single loan into that trust.
They have. It's about 25 million, I think.
Okay. I'll say, for us, assets are not an issue, right? We as a company originated a little less than $1 billion last year. So for us to be able to fund whatever our appetite is, we will certainly be able to meet that.
And Chirag, could you speak to this sort of scenario where Maker really hits the, the eject button or whatever?
Yeah, I mean, look, there are plenty of places, right? Private debt funds and others that's always looking for paper. And so, if push came to shove and you had to get out, could you get out? You absolutely can. Absolutely can. Now, I can't tell you what price, right? The longer you have, the better the price. It's no different, right? Than if you had your house and you want to sell it in 2 days, or you want to take, 2 months.
And you speak about partnership. Obviously, Cogent originated the loans, understands what's in the loans. We're going to hold 50% of all these loans. Right. So. And so could Maker, I don't know if you can make any commitments here, but can Maker rely in your help in finding liquidity?
We have to be very careful from a regulatory perspective, meaning, would we? I'd like to think, if we're good partners, we would certainly always assist, right? Because it is a partnership. What I can't do is I can't guarantee you that Cogent would, and or that they would absolutely 100% and go find somebody that would. Does that make sense? And I know that's not, I'm maybe avoiding the question. My intent is not to avoid the question at all. Certainly, could we arrange meetings with others that would be very interested? Sure. I mean, do we talk to people in Wall Street and the debt space that are looking for paper? Absolutely.
That's good to know, and appreciate the question there again, Max. We got even more from chat. A lot of people here today, so appreciate you guys kind of taking these rapid fire. Obviously, if you do have a mic, feel free to hop on, but I know at least our next one doesn't, so I'm going to read it out. Basically asking here, you talked a little bit about the kind of partnership in terms of 50% exposure. But the question is asking, given the economic outlook, things could get worse. Like how, what are our assurances that some of these deals won't go bad, especially since Maker is fronting so much of the capital?
Yeah. So I see the question. That's the one from Johnny. Is that right, Peyton? Yeah. Certainly there are no assurances, right? So these are loans and not treasuries. Certainly, people always believe when they buy an asset that things are always guaranteed. There's nothing guaranteed. When you go buy a bond, only thing guaranteed for that time is the interest rate you're going to be paid. Unless it's backed by the government, you're not guaranteed of the principal either. So in this case, there certainly isn't any assurance that I can provide other than we've underwritten the loans. We've done everything that we can. We are aligned because we continue to own 50% of it. And our goal is never to sell you something at inception that's ever been a problem. Does that make sense? I mean, and I think there are outlines already in there that, it's current, has to meet certain parameters from a regulatory rating perspective. And that's all we're going to be doing. But certainly no guarantee, but there's alignment that's created from the get-go. It'd be one thing if I originated a loan and sold you 100% of it. Absolutely. But in this case, we own 50% of it.
And I've pulled up the participation agreement, which we're going to copy paste. And the protection for Maker is that there's loan to value requirements. There's debt service coverage ratio requirements. There's credit score requirements. There's collateralization requirements. There must be collateral like a building. And then you can look at Cogent's track record. There's a 0. It's like a 0.034% ratio of non-performing assets to the total book.
But it goes back to Peyton's point. I'm not going to sit there and tell you, all banks have done very well, to Peyton and Johnny's question, over the foreseeable past. So it's a great question. And the only I can tell you and the assurance that I can give you is we're partners from the beginning. We are 50-50, but you're absolutely right. We are in volatile times, don't know what tomorrow holds. Again, this goes back to my point earlier. It just goes back to what Maker's ultimate vision is and executing that vision. There's never a perfect time to take on something like this. And if you're ever going to earn, 5, 6, 7, when the rate's, 4.5, there's risks that you are taking to earn that. Then you just got to go, are you comfortable with that or are you not?
Would it make sense for Kyle to talk a little bit about the WARE internal risk assessment system? Is that, maybe we'll just poll the room. Like, does anybody want to get into the nitty gritty of how Cogent scores specific loans?
My take.
Okay, all right.
Yeah, go for it.
It doesn't seem like there's interest. So, okay, we'll leave it there.
Well, we got plenty of other questions in chat. We might still have some time at the end of this, so we can always maybe return there for a little tidbit. We had another one here. It's asking if, why isn't Greg DeBrisco on this deal? Mentioning that Reward Assets Company was kind of partnering with HVB deal.
Why isn't Greg on this deal?
Yes, that is.
I work with Greg, and in some sense, he is insofar as we are going to stand on the shoulder of giants. He works so hard to put together that HVB deal and do the legal and structure it and get through governance and really demonstrate how it's going to work. And at this point, he's made our job here 95% done. So he's not here, but in some sense, he's certainly present, not physically or vocally, but his work is present.
Going through a few more here. Soundwave, if you have a mic, feel free to hop on. Otherwise, I'm happy to read it out while I go through the chat here. And I'll give it a read. If you have a follow-up, always feel free to add in. You mentioned that we are effectively copying and pasting the HVB deal. I don't know why I was such a trouble with that, which has probably been considered a proof of concept for DAO's real-world asset investments. Do we really want to copy and paste it, or should we be looking to improve upon the structure meaningfully?
I wouldn't say the structure needs improvement. I think the structure is really good. Maybe the participation agreement gets tweaked a little bit. We're not opposed to, but we're not going to do it without bringing that to the DAO and making a case for it. Or if it's Maker that wants to make the change, I think, we're going to listen and see if it's workable. There's a question here about, do I have an opinion on specific collateral or loan categories? And actually, I've just spoken with Kyle about Cogent's portfolio and whether they can put together a portfolio that they might be able to participate right away or in very short order. Kyle, do you want to talk a little bit about the construction of that and the size so that these folks can understand Cogent's going to make use, like if Cogent's grants a debt ceiling, Cogent's going to use the debt ceiling in short order.
Okay. Thank you, Max. Kyle Feldman, Cogent Bank. Yeah, we put a tape together about $259 million worth of loans, just to make sure everybody knows these are all secured by either a single family residential and or owner-occupied commercial real estate or a non-owner-occupied commercial real estate collateral. So these are all actual real-world assets.
And maybe in the coming days, we can actually put something on. Kyle, we'd be able to put something on paper and talk about what the average loan to value is and things like that?
Absolutely. Yeah. Just from a distance, on the residential side, the LTV is about 60. The DTI on residential is 31%. On the actual owner-occupied side, we're at about 58% LTV. DSCR is well above 2. And on the CRE non-owner-occupied, it's roughly 60% with a DSCR about 180.
And again, let me be clear.
Sure.
Those are based on the assets that he's looking at, okay, of the tape. I don't want anybody to walk away thinking that that is exact. I think at the end of the day, there are criteria that have been put forth in the agreement, and our job is to follow those on each individual asset that gets placed in there.
And primarily fixed or mostly fixed rate. Is that right?
That's correct.
Okay.
I might follow up on that one a little because I think it is an interesting topic. Like we had brought up earlier in the call that didn't HVB have trouble, placing some of these loans and stuff. And that was one of the things we had to do with the original deal was kind of expand the definition of what type of loans could qualify. So I'm just curious, what type of loans do qualify under this agreement? Is the same as the updated list for HVB? Or is there a different type of exposure you're going to be looking for?
Well, I would say that from my perspective, Peyton, it's whatever you guys want, right? We originate all different kinds of assets, right? So the ones that Kyle mentioned were really around real estate backed, right? So whether it's residential or commercial real estate, we certainly, we originate all kinds of loans, right? We can give you jets. We can give you loans collateralized by jets if that fits the criteria that gets identified in here. So there's a lot of things that we can do.
Yeah, and the specific language in the agreement here says all loans originated or purchased by seller in its ordinary course of business, and that in all factors comply with the seller's credit policy and loan origination guidelines shall be considered to be eligible for participations. That's the exact language in the participation agreement with HV Bank.
Very neat. Thanks for following up and showing us that. All right, we do have about 9 minutes left on our plan call. So I do see more chat coming in, but do let this be kind of a last call for questions and comments. If there is something you want to have addressed on the recording, would love to get it up there for us. So first one, we got another one from Michael asking, Max, if you could tell us more about your team and your resources. I guess that's kind of, you presented yourself as kind of the ranger in this, so perhaps where that's coming from.
The team is me. I'll add more people if that's necessary. But right now, there's no need.
What was the team, Max, in the Huntingdon Valley deal?
It was me and Greg.
Got it.
Yeah, I had a feeling it was a smaller team as well. Definitely. As a governance facilitator, we try to make governance as easy to get through as possible, but are aware that it's no joke trying to negotiate a deal with the DAO. So really appreciate you guys coming together and getting to participate and hop on calls like these with our community. And this is really what helps us get improved structures, better deals, and really grow the space. So I have one more question in chat I'm going to read out here. So if you have one more, better drop it soon so I don't end it. But this one again comes from Johnny, who's asking, how confident are you and what time frame do you think that Cogent will be able to originate these 100 million in loans?
So I think Kyle kind of, we already have a tape of assets that probably fit the bill already. So it's literally a matter of getting through this process and then through whatever legal process there is to go through. But, if you said, hey, we're ready, everything is ready, how quickly can Cogent do this? It's 30 days, right? Maybe, for us, it's as long as the infrastructure is built out at the trust and all the legal documents have been done. It's, like I said, we have assets that fit what you're looking for today.
Exciting position to be in. All right. So final call here. I know we're filled with a bunch of delegates as well as some facilitators and other people. Is there any more information we would like to see before considering this MIP? Keep in mind that it is going to be going up to vote on Monday is the plan here. So if you have any questions, not a lot of time to decide before you vote. All right. Well, looks like we had a pretty compelling presentation. I know we covered a lot of ground and got a lot of voice in there, which is really exciting. And of course, as soon as I say that, we get a couple more questions that we could squeeze in. So I'm happy to indulge. For Xander,
I see the loan pay. I see the comments. We service all our loans.
Very nice.
In terms of monitoring, Ankura has been doing the publishing of data. And then it seems like each of the arrangers are going to probably collaborate on a common, some way to get the data standardized so that it can be apples to apples if anybody wants to look at the data.
I know we have several teams on the Maker side that work on that too. So we'll be curious to see if we can collaborate there.
There's a question about average loan age. The maturity will be the duration will be 5 years or less. And that's in the participation agreement as a requirement, I believe. Let me just double check that. Yeah. The fixed period shall not exceed 5 years. That's what the agreement says.
Hey, I don't know if you guys can hear me. I got a question for Cogent. Do you guys have any angles as with regards to American banks, or the other way around, crypto-based companies participating with banks? Do you see an angle there where it's favorable for crypto companies to participate with, an FDIC insured bank, a regulated bank, and this is just an opinion I'm asking for. Do you see an advantage for crypto companies to do such? Because I think there might be an angle there. So I was just wondering how you guys have thought about that.
So, we have actually tried to bank that space, right? We've tried to bank the crypto space. It's not news. I mean, again, if you do any homework on us, you'll see press releases, all the things we invested in technology that would allow for, hedge funds and other people in the blockchain infrastructure and crypto, exchanges. But to your point, there are a couple of banks that really own that space, Silvergate and Signature, and there are a handful of others that have gotten in there. We have tried, candidly put, to get into the space. We know we can create value, but it's like grocery stores that you go to. You just, if something's not wrong, you're not going to change. And so a lot of those companies haven't wanted to change. And so, but I will say, with some of the turmoil that's taken place as a result of FTX, banks like not Signature, but I would say Silvergate, that are in the news. And so we're getting more calls from crypto exchanges and others who may want to do bank business with us. And, if they meet the regulatory criteria that are set forth, we would love to do business with them. Again, we offer the infrastructure and the technology that would allow them to do business. Now, is there an advantage for them? I mean, most of these crypto funds and companies all bank at a fiat bank today already.
Yeah, I was referring more to a crypto decentralized organization like Maker funding an American bank, right? That's pretty unique.
Oh, it is.
So, and also the fact that you guys are based in Florida, which is shout out to all my friends in Florida, which is a Republican state, a red state. So just wondering if there was an angle there that you guys think it's favorable for a decentralized community like Maker to do business with someone like Cogent.
Yeah, well, I don't think there's anything that I'm aware of, regulatorily speaking, that makes it so that we couldn't do business with you, right? I mean, the reason why we're putting this proposal is something I can tell you that we have had discussions with our regulators around, and they are comfortable with us moving forward on a structure like the one that's been proposed. So again, I think somebody asked a question earlier on around, around what does a long-term partnership look like? I think that all depends on what Maker's needs are. What I can tell you is, a partnership starts with one relation, can be built from there. And I think Johnny was one of the guys that had asked that question early on.
And Chirag, correct me if I'm wrong, you are part of an organization that has many banks that come together. Is that right?
I don't know what you mean by that.
Okay. I thought when we spoke before that you were leading an organization of banks that came together. Sorry if this is...
No. Banks, a consortium of banks can come together on deals and transactions and such. And certainly we have relationships with many banks right here in the state and outside of the state that, if necessary, or created a risk to Cogent from a concentration perspective, could we find banks that we could partner with to get things done, to diversify the risk? We certainly can.
Well, I do want to be mindful of everyone's time here, and if we get a flurry of questions at the end, we can still, obviously reply and get things answered in the forum post, which is kind of what I'd recommend. Just to close us out here, Max, curious if people have any further questions or they want to do any further investigation. Got any websites, any social media? Where should people go to check out Cogent and this deal?
What was that, Peyton? Was that for Max?
Either one, really. Just curious if people want to follow up and look into this. Like I said, voting is starting on Monday.
You can check us out. I think if you just pulled up Cogent Bank on Twitter or Facebook or LinkedIn or our website, you'll find us. Where there are not a lot of Cogent banks that I'm aware of.
And you can ask questions on the forum, and you're welcome to DM me on the forum or Discord. I've been trying to have conversations with anybody who wants to talk. So by all means, please reach out. We really appreciate all of you showing up today. And we really appreciate your questions.
Yep. And from my perspective, I thank you for the good questions. And then, just thank you for the opportunity in the end, right? Whether we get voted in or not, I really appreciate the opportunity to meet and understand a lot of what you guys do. And we're always going to be here.
So we really appreciate you making the time for us. Like I said, this is going up for vote on Monday. Please feel free to reach out if you have any other questions or concerns. Otherwise, really great to have such a well-attended call and so many questions on this proposal. Look forward to seeing how the vote goes. Thanks, everybody.
Thank you.
Thank you.